Hello and welcome to Wyckoff Training Academy. This is training session for the last and final concluding session, especially for 206 and 208 version. I would be recording another video for 213 version. So in this version, we are going to speak, like in this particular session, we are going to talk about, one second, let me set up my chart. Okay. So we are going to discuss about two things. One thing, the concluding part of 208 version, and then how to use everything together. So for this particular video, I'll hide 213 and just focus on this one. So now, this was in the last video, I touched upon this OS part and this pyramid, or you can say, basically they are triangles. They are histograms depicting triangles, or depicting in the form of a triangle. Some call them pyramids and some call them whatnot. So it's up to you whether you, whatever thing you want to refer to it as. So now the beauty of this 208 version is that we have price oscillator, we have volume oscillator, we have this added feature in the form of depicting demand with an upward arrow green and supply with an downward arrow red, and as well as the background. You can see the background is mm, red, and in the same manner for demand, the background is green. So, like if you go to the indicator setting and you change the opacity to 50, let's say, you can see the color has changed. This what I like to see is like in the form of, this is my color combination. Things are visible, like now green is not coinciding with the green background, and red is not coinciding with the red background, though it is to some extent. So what is why to use this? Why to like this is an we can say uh, not upgraded, but this is somewhat an enhanced indicator uh, based on like the one which I had given issued previously, was that was 164. That was Weis wave auto price and volume. So now what I did is I added price and volume, price oscillator and volume oscillator into it, and then higher time frame, and then this background. So why to get this background? What basically 208 has to offer up when it compare it with the 164 version. So actually, whenever there is a new update or whenever there is a new version release, the based on the previous versions, so there are certain codes and certain things which were added into it. So uh, in few days, this would be again updated. The 208 version would be updated, and alerts would be added into it, so that people using it on multiple, like for example, if you have, for example, in your watch list, if you're using previous consists of like 50 stocks, 50 instruments or 100 instruments, and or 30 instruments, you can just plot attach the indicator and set the alerts based on your plan of trading view, and you will get the alerts. So whenever there is a green like demand signal is appearing, or whenever there is supplies signal is appearing based on 60 minutes. So, or either ways, like for example, here I have done it in such a manner that if you are using 60 minutes, you can use 240, that is 4 hours. If you're using, you can use it on daily. It depends, like which time frame do you would you like to trade based on. So I normally refer for XAUUSD and EURUSD. I normally keep 60 minutes. That what I feel is suits into my trading. So now, what and how to use this thing together. First thing first, you see your price oscillator is selling, and your higher time frame, whichever you're applying, is showing you a selling signal, for example, and you're getting a green, blue, fuchsia or pink background, and then you're observing prices moving up downwards. And when price is moving downwards and the supply is getting greater or bigger, or it is evident, or it is showing more uh, higher, now you can say, it is comparatively, if you see with the demand, This is showing you strength, like not strength, but the number of selling supply is greater than the number of demand. So even in the update, I'm planning to plot the give you the values so that you should be in a position to see whether which side has a greater power. So I'm going to add it into this one also. There would be two things which would be added into 208 first. So when this thing will appear, it will automatically show you that which side has a greater power. So now when we are approaching downwards, you can see supply is getting decreasing. If I consider red as a supply and green as a demand, so then you can see supply is decreasing, and it is decreasing in the 1 hour supply based on 1 hour supply. So if that is the case, that means like I'll explain this analogy first so that everybody should understand how I observe the market in terms or how market works. Like for example, in 5 minutes, price is trending upwards, but when it comes to 60 minutes, for example, we are taking just for sake of discussion, 5 minute price is trending, and in 60 minutes, price is trending down, and this is the portion wherein this entire up move is taking place. You're getting my point? So this is your 5 minute move within a 60-minute move. So many will feel this would be first time information for you. So please bear with me because this is very uh, it's an extensive information which has been which you are like getting exposed to. So please bear with me. This is a up move in a downtrend of 60 minutes, and you're trading. If you're trading on a 5 minute, that means your up move of 5 minute is just a correction, mere correction of 60 minutes. This is one case. This is case one. What would be case one? 5 minute up move would be a correction move of 60 minutes. What is case two? So let me like this is the beginning. The case two, this is 5 minute, 5M up move, and this is a 5 minute move in this entire downward 60 minute. So try to correlate this entire move is in this particular signal move, and now this is would be the beginning, and 60 minute would start moving upwards. So now many people there is a saying within the professional traders that really your lower time frame would reflect the trend change first rather than your higher time frame, or your higher time frame would be the what you can say the time frame trend. Higher time frame trend would be the leading trend compared to lower time frame. But that is the reason I have like uh, introduced this higher time frame, so that whenever what is happening on the higher time frame, we can align it with 15 minutes. For example, you can make it to you can change it to like for example 240. Okay, time frame 240. So this will give you the idea what is happening in the higher time frame. If higher time frame is showing you buying, and if I'm getting a buying, a demand is generating at this particular point, then I would only look for buying opportunity. Or this is a one trending trade. Trending trade is like if there is an up move has started and on a 60-minute or a 240-minute chart, and I'm seeing the demand is there uh, in this particular example. So my 5 minute or 15 minute, what I would like to see is a low volume pullback to initiate a trade based on the information given over here. So this is very valuable information. If one understands this thing, then making money in the market is would be like it would be it would become a hell lot of easier to any trader, whether they are trading Indian stocks or whether they are trading any stocks, cryptocurrencies or any energies, bullions, and anything, any freely fairly traded financial market in the world. So what we are doing, I'll repeat myself. If your higher time frame, whatever your higher time frame is telling you, or is showing you here, that by in the way of like whatever color selection you are doing, whether blue for uptrend and red for downtrend. If it is showing, for example, it is showing you an uptrend. Okay. So what I would be looking out for, I will be looking out for buying opportunities, only buying opportunities on my 5 minute time frame till the time this higher time frame is in a upward trend. So I would look for buying opportunity on 5 minutes. So now, based on this thing, only this thing, you can make a hell lot of money. Like we'll look into an example for that one to make things more realistic and more uh, practical. Like for example, this is 30th June, 30th Jan. Sorry, my bad. So this was the duration on 240 minutes. This entire till 31st noon time, the market was in an up move. So now, if I apply my 206 to it, I'll try to see have I got any trading or tradable opportunities. And this is I told you earlier. If I want, I can also apply my trade setup one, trade setup two here. So my trade setup one was stated me buying over here on the first pullback. So this was my first pullback buy over here at this particular point. And my accumulation and distribution indicator has given me a distribution line, a breakout, a test. And here you can see there is no whatsoever supply over here. So I just look for a low volume entry at the after a breakout. What two things I look into when I correspond this indicator with this indicator? Either the demand is there when the breakout is happening. Yes, the demand is there. And on the pullback, is the volume low? Is the volume low on the pullback? If the volume is low on the pullback, that means I can place my bet over here. I will buy at this particular point, at this particular point, or either I'll place a limit order. As soon as it breaks the high of this level, I'll enter into a trade with my stop here and I'll ride the trade till it reaches a particular level. So now coming to chart. So here it was now. What you would say is like now the higher time frame is selling as green. Higher time frame and lower time frame because this higher time and lower time frame candles are a bit different because if I consider 4 hours, that means you can do the math. How many 5 minutes candles would fit into it? So that's the reason on a 5 minute time frame, I recommend everyone to go for a 60-minute chart, and for 15 minute, I recommend you go for 240 chart. So now, for example, over here, I'm getting a selling signal like this is supply in speed because this is supply is present. We got some degree of um, a, a push towards upper side, and then price started coming downwards. So as we approach this particular key zone, we see how the prices or how the volume is decreasing. And the volume decreasing means there is no whatsoever effort to take this market downwards. So there is lack of supply. So if you are planning to buy on this particular point, like for example, I explained earlier, on key zone, either you buy on the first pullback or at this particular point or either this particular point. So if you see this kind of price behavior, supply is getting exhausted, decreasing of supply. That means somebody is buying here. So if you are buying here, then at the end of the day, your targets would be these two lines. And this is a very good move for like intraday positions. And even if you take intraday swing, any kind of position, it is very good. No problem with that one. So uh, this is how you have to trade based on this one. Like now we'll take another example of with the on this analogy. Let us see what is happening. We'll talk about these two bottoms, how these two bottoms are formed. As we were approaching downward, the higher time frame was supply demand, but the this is I consider this to be a 1 hour candle. So I'm just giving an example. This might not be a 1 hour candle, but assume it to be a 1 hour candle. So there would be 10 candles or 6 candles, 5, 6, 30, 10, 12 candles, 10 or 12 candles. Uh, yes, 12 candles, which would be making 1 hour candle. So this entire 1 hour candle is showing us demand, but rather it was price were coming downwards. So that means this two time frame, higher and lower time frame, are not in sync. Try and understand. Here the lower time frame and the this is demand is coming in. That means these two time frame are not in sync. But here in this particular case, after this one, this entire price move, demand is there, and as well as the 1 hour is also showing us demand. So that means it has both the time frames are in sync. We have to look for a trade when these two time frames are in sync. So what was the opportunity? The breakout test. It happened somewhere around here, I guess. This was a buying opportunity. Now either we buy on this one, buy or sell around liquidity line. You say on the accumulation and distribution, minor accumulation or distribution, which is incorporated into 206, or either we buy on the first pullback. Either ways, this is the first pullback. The supply is getting decreased. The supply is getting decreased, and we got a 1 hour demand taking shape, and then we we would have ridden this entire trend move. Now we'll look into Euro USD. And don't worry if I'm just trying to give you small bit of information. Once I every day I'm going to record a video like 3 or 5 minutes. So in that video I'll be telling you why I've chosen this trade and why this trade has worked. So now for example, here this background is blue. That means your my 1 hour is showing uptrend. As soon as I get the first pullback, I initiate trade. Now many people will say, sir, what is the first pull like? Nobody would have got and nobody would have entered over here. So now, for example, what I do in this kind of trades, I put a limit order above this one, or either the last candle of which is as we are approaching downwards, because I know the demand is there in the background. You can see the demand is there, supply is weak, so this market has to go upwards. And overall, my dynamic trend is also showing me that prices are going to go upwards. And if the price oscillator is also showing, then I'm getting 3, 4 confirmations from this one. So then here you can see it is going upwards. And then if you had put a limit order at this particular point, you would have entered into the trade and this one as and this being your remaining, this being your stop loss, and this higher levels as the ski zone and liquidity levels as your target. And now the target is achieved. So now let's look into FCPO. One second. FCPO, especially for my Malaysian student. So if you're trading on a lower time frame, just keep it up till this one. Like how I'm doing my analysis, that is what I'm showing you. Here we have crude palm oil, uh, We have demand generating here. Look at the supply, the red histogram. It is showing us no whatsoever supply, and the background is blue. That means it is demand in on 1 hour. I would just look for pullback. I got first pullback at this particular point. I bought at this particular point, and either this is my trailing SL. I'm trailing the SL accordingly. If I have bought at this particular point somewhere, and I don't know what the calculation is based on this FCPO, how many points makes how many points, and how much money is required, or how much money is been made when if we get 10, 20, 30 points in this one. So please bear with me. I don't know. If you want more, like if you want me to explain in more proper sense or greater sense, then please share me. Whoever the student is who's trading on FCPO, please let me know what are the points calculation and how much amount of money you make in 1 point or 10 points, so that it will make my task easier to while explaining. Nevertheless, this is the continuation kind of thing. Now, as we are approaching downwards, we can see demand has come. Now, I'm not talking about this one. This is supply. This is a selling climax. And as we are approaching downwards, the supply, I'm talking about this red supply is diminishing and price is holding this level. So this acts as a string for us. Though this is a counter trend move, this is a trend trading setup TT, and this is CT. That means counter trend trading. So when you're taking counter trend trading based on accumulation and distribution are the tools which will make help you in taking counter trend and trend trading tools trades. So here also we got, but we haven't got a pullback. Here we got a pullback at this particular point, which this is just a drifting of price. Rather than this one is a pullback, price came back. You would have bought here, stop loss underneath, and based on your points calculation, and the respective target would be this one, and I think it has achieved all the targets, and it made good money. So this is how it has to be traded. Use it according to your higher time frame should be, and based on the higher time frame, look for the trend to be in favor or in sync with the higher time frame. So when both the things are in sync, that means it gives you higher probability of winning the trade. So that makes this 208 version more important and more easy and more profitable, because you're trading on a higher time frame demand and supply level, and aligning your lower time frame demand and supply level to initiate a trade. So I hope this video has given you some new insight into how to trade, and more videos to come. Now that I conclude the today's training session, and few the remaining points I would be discussing in sessions which I would be recording on daily basis for Euro USD, JVP USD, XAU USD, and for my that one Malaysian student FCPO, so that on daily basis, and my time frame would be 5 minutes. So based on 5 minutes, I'll be sharing the trade setups so that you people can realize how I trade, so that you can copy my trades. I'm not talking about signal. I many people approach me to give signals and all this stuff. So I'm against it, because I want to make people more. I want you to be capable enough to earn the money by your own self, rather than being dependent on somebody else. So once you get this tool, once you know how this tool is, you can make thousands and thousands of dollars per month, provided that you have a sound trading psych and your capital. Okay, and this video is for educational purpose. It does not guarantee any profit or sort of things, but you can make you can make a living out of trading if you know how to use these tools properly. So watch these videos and give your feedback on the videos, so that whatever things you want me to add into it, this one, I'll try my level best to add. Okay, thanks a lot. Bye bye. Good night.